Sure it's going. Hello, everybody. Today we are with Robert Garrod from Homeseed Loans. And Robert and I are here to talk a little bit about what home buyers should look at doing when they start thinking about buying a home. And as I mentioned in my Instagram post, it is not looking at homes. The first thing is actually contacting a really good lender like Robert. And so, Robert, you and I were talking a little bit about some of the things that that people need to do, and like number one is getting qualified for a loan, and actually finding out if you can even get a loan. You know, if you qualify at all. And maybe you can talk a little bit more about that. Sometimes people don't qualify right now, but you can help them prepare if they don't, right?
Yeah. Thank you for the introduction first off, Judy, and thanks for having me. But yeah, I'll talk about a little bit about this topic. I think it's definitely big right now, especially with everyone predicting the biggest purchase market of all time coming here soon. So
Mhm.
we'll see how that turns out. But with inventory being so low, but uh, the first step in looking for a home is getting pre-approved, and that I don't love the word pre-approved. I like to more saying like, let's see how much I can afford. That way it because when you're saying pre-approved, you kind of think credit card or something like that, where they just hand out pre-approvals willy-nilly. When you're buying a home, I mean, it's going to be it's tenfold of a credit card. You're not just telling them what you make, what your credit score is, and all that fun stuff. We're actually doing hard pulls, and we're getting documents to verify every single thing, um, every bit of your file, especially income. Now, a lot of people will go to an agent first, and then the agent refers them to me because they need to know where they're at. We need to see how high you can purchase in order to know what kind of homes that you're going to be shown and what's realistic to you. Now, a lot of people who are like, oh, I'm waiting a year to get before I go looking for homes or before I want to buy. I don't need to apply right now. I know I'm not ready. I'm good. I would still recommend applying then, because we can then show you exactly what the process is going to look like. We can show you what your income is right now. Do we need to increase that income to get you to the spot that you want to qualify for, to get you to that 550K purchase price? Do we need to increase a down payment? Do we need to plan for saving? Do we need to improve that credit score? What do we need to do to get you to where you want to be in your time frame, right? And in order to do that and get a good plan, we need to put a whole file together and pull your credit and see where you're at, debt wise, income wise, and then that way you actually can have more comfort in knowing, hey, if I do these things, A, B, and C, then that'll get me my dream home or whatever in your time frame. Some people also don't realize that they do qualify for more. I think there's a lot of misconception in that you need a 20% down payment. Like, for instance, you only need 3% right now, depending on your current situation. So it's always good to just see where you're at. You might get pleasantly surprised.
And a lot of people that I've run into think that, well, you know, I don't have any credit. I don't have a
Yeah.
credit card. I don't have any, so I should be good, right?
No, you need credit. You can do non-credit stuff, but in those cases, it would be more of a non-traditional credit, where we would see certain things, and you get a higher interest rate when you do non-traditional credit. So it's not the best route to go, but in that time frame, you want to start. Uh, Getting some credit, whether it's on your rent. That's kind of a big way when you're renting an apartment or a house or whatever it is. That's building your credit. Co-signing on a credit card with somebody, that'll help your credit. Anything you can do to start credit and build it is huge right now, especially after COVID. A lot of banks are looking at credit score a lot more, because of a lot of people, they're expecting a lot more people to start defaulting, and with a lot of people not having a job right now or coming back into the workforce, um, the banks are being a lot more careful. So credit score is going to affect your pricing on your rate a lot more than it has in the past.
Mhm. And as you were saying, when you come in to qualify, you want to find out how much you qualify for. You start looking at houses first, and you find this house that you absolutely fall in love with, and then you go look for a loan, and you don't qualify for that much. It's what's happened with my clients in the past is they never forget that one dream home that they can't afford, and it makes it really hard to look at the homes if it's in a lower price range that they can't afford. If it's in a higher price range, well, then we are just on a pink cloud. But if it's in a lower price range, it makes it really tough. So that's why it's so important to go to the lender first to find out the price range that you qualify in, so that we're looking in the right price range to begin with.
And of course,
Um,
there's also not only the price range, but the type of approval you're getting is completely different. If you're getting a pre-qual letter, that's as good as trash. I mean, no one is going to look at a pre-qual letter. That what pre-qualification basically means is that the lender asked the client questions, the client answered it, and the lender has now approved you based on the answers to your
yeah.
questions. There's
So when you
no documentation behind that. Yeah,
So
sorry.
beyond a pre-qual letter, what would be the next best? Because we, as realtors, when we write an offer on a home in this market in particularly, we do not submit offers at all without a letter from a reputable lender, not
Hmm.
just any lender, and ideally, and I can't, and maybe you can talk to this too, or maybe you can't, but I can, not some online lender that people can't really get a hold of the person who did it, but a local lender who is reputable, who has some skin, who has a name that we know. So,
Yeah.
so the letter, what would be the next best letter?
So the next one would be a pre-approval, just your normal pre-approval. That's going to be, a lender like myself, loan officer, loan advisor, we call them. Um, has gotten your file, gotten your application, reviewed it, requested documentation, gotten the documentation back, and reviewed that documentation and determined your income based on that documentation. So there's actually some backing to it, right? The reason that makes it way better than a prequal because you have someone who's actually looking at it and you have actual numbers. Now, um, it's still not the top tier of pre-approval though. The top tier pre-approval is actually fully underwritten, so you can actually go throughout the entire process before it's done. You're just missing a property. So you send it into your lender. The lender will ask you for documents, and probably more documents than a pre-approval, because you're fully underwriting right now, right? And then once your underwriter gets back to you on whether you're approved, then it's what we call at Homeseed a credit approval, and that will uh, expedite your process, and it'll make your offer look way better than anyone else, because it's basically a done deal. It's like guaranteed this will happen at this
Long as
price
nothing
range.
changes in your credit or your job situation, you're gold. It's like cash in the bank. You just need an appraisal on the house, pretty much, right? So that's the strongest thing. And about how long does that take for a buyer to get when they come into you?
For us, as COVID has calmed down now, we're looking at about a 24-hour turn time
Oh, cool.
in underwriting. So once we have all the documents we need, it takes 24 hours right now. And we actually just hired a dedicated underwriter here for us personally. So our turn times will go down to zero here shortly. But we're catching up
Get
with all the
fully
volume.
underwritten. To get fully underwritten?
Yeah, yeah, yeah.
Wow. I'm
Yeah. Once we have all the documents, if for some reason we need to come back with another document request order, then it could take a couple more days. But other than that, if we have
documents.
everything up front and we can
What
get it
kind of
reviewed.
documents do you ask the buyer for? Given
Uh,
this,
it's a lot of income documents, so it's tax returns, W-2s, pay stubs from the last 30 days, and bank statements if you need a down payment for something. If it's a refinance, you don't really need that. Um, and then if you are self-employed, it's more documents. It's business returns and uh, profit and loss statements, all that fun stuff.
And when you ask for a document like a bank statement, you want every single page, whether it's blank or not, correct?
Correct. Every single page. A lot of times banks will have 5 or 6 pages. The last page is blank. We get 4 of the 5. They send them in, and then we got to come back for that last blank, completely empty page just because on the bottom of the screen it says 4 of 5
So,
pages.
so folks, when you hear, please send in your documents, please send every single page. It will expedite the time that's involved in that.
hmm
So one of the other things that I had pointed out were they get to find out the different loan options. There's so many different loan options that people can choose from based on, like you said, they don't necessarily need 20% down. Can you kind of give them some examples of some different loan
I
options?
mean, you can get wild with it on loan options. We throw loan options. We like to give 3 different options for everybody. We recommend different products, whether it's conventional FHA, VA, USDA. Those are different kind of products, and based on your file, we will recommend a one for you. But we can go over every single option so that you can make the best decision for yourself. A lot of FHA buyers are more people who have lower credit scores because you get a better credit rating and you actually get better mortgage insurance with an FHA. So it helps people who have lower credit scores who would get hit with a much higher rate and price on a conventional loan. If you had a great credit score, you go conventional and you got some down payment. You're going to have the better options going to be conventional. I could talk all day on these differences
Yeah,
though.
I know there's
So it's a lot. But no, I mean, we like to show loan options. I think one of the main thing that a lot of people don't know about loans is that when they go to their agent or their loan officer, they get a rate, a par rate. They get okay, here's your rate for today. That's not what we do, and what I think anyone should do. They should show different rates because honestly, all the rates are available to our clients. Practically all of them. Like if someone wanted a 2% rate, you can get that, but you're gonna spend a lot of money to get there in closing costs. So we want to make it into more of an analysis for our clients on our end. How long are you planning on staying in this home that you're purchasing? The longer you're staying in this home, the lower the rate you're going to want to buy it down. If this is a starter home and you only plan on being there for 5 years, take a higher rate, get a lot of money back for your closing costs, get your closing costs covered completely, 8 grand, whatever. Maybe you're definitely going to be spending more monthly, but if you're leaving within 5 years, most likely you're going to be saving more money on the closing costs than you would pay your monthly extra than if you had the par rate. So we actually do analysis and we actually show you the year it actually makes sense on our stuff. Um, but again, I only know like one other lender that does something similar to that.
So, so people know they're familiar with the term down payment, but they're not familiar with the term closing costs. And when you bring that up, their eyes glaze over and they're like, oh, wait a minute. So can you kind of briefly explain what closing costs are? Buyers have closing costs and sellers have closing costs over and above a down payment. So can you kind of give an idea of what closing costs might look like for a buyer?
Yeah, closing costs are going to be, several different things. There's going to be the lender's costs, which in ours it's I think like around $1,500 for us. And then you got, your appraisal, your credit report fees, your title fees, your escrow fees, and those are all dependent on the third party companies. So we give out an estimate of what those are going to be, but until we're under contract and ready to go, you're not going to know what those fees are going to be. But we give a pretty good estimate on our end using our title company's quotes. Now, there's also fees or closing costs that aren't associated with any fees. What does that mean? It's like your escrow. You're filling your escrow, right? I mean, you could waive escrow. There is a fee to waive your escrow account, which is another another conversation. But yeah, so we're trying to fill escrow accounts, so we need to account for taxes, your insurance, so that that's being paid every month. So they fill it with a certain amount of reserves depending on your file, right? Whether it's 6 months,
That's
3 months. So that could come out to like, you know, 3 to 5. I've seen it, extremely high in the past. um, but it depends on your property, the day you're closing, the time of the year you're closing, and how much we're going to collect for that. And that just kind of goes right back to you, anyways, because it's going to pay your taxes and your
And that's required by the lender.
insurance.
The lender wants to know that those taxes and that the home insurance is being paid, so they hold the reserve
It's the same.
escrow. Yeah.
Yeah, that those are going to be the same no matter where you go, that's going to be paid for. And like I was saying earlier, though, if they wanted to take a higher rate to cover some closing costs, they could actually take a higher rate to cover some prepaids and reserves as well. On top of that, you're also paying your first month's payment as a prepaid and upfront. So let's say we closed today, which today is March 12th, your first payment wouldn't be until May 1st. So you're skipping a month's payment. So a lot of people see the higher closing costs of, like, they run around, it's around $8,000, I'd say, just to give a general
I normally say about
closing cost.
3.5% of the purchase price to be safe, to cover the closing costs as a buyer.
Yeah, that's pretty high. If you're looking at a $500,000 home, you're gonna, it's not gonna come to anywhere near to 15 unless you're really buying down that rate.
Okay.
Like I had one at 580 or a 510 loan amount. That's after the down payment and everything, and the closing costs were a little over 8 grand, and they paid down the rate a little bit on that. So it's yeah, I would just say it's a kind of a more of a fix than a percentage.
Okay. And then the thing I'll close with, because we don't have all day, is, can you talk about some mistakes that buyers could make when they're looking for a home, things that will really mess up their ability to buy based on.
Not just looking at the home, but also once you're under contract. There's a lot of mistakes that people can make. We always send out the moment you get pre-approved, and then or the moment we go under contract, we send do's and don'ts. We send a long list of questions like, hey, are you going to be in town in the next month or two? Are you leaving? Because we need you present to sign somewhere. A lot of people have vacations. We find that out sometimes. We we want to make sure you're not buying any cars, you're not buying anything big, you're not you're just doing your normal payments. And if you're very close on your ratios and you're like, let's say you qualify for 550 and this home is 550, you might want to check with your lender before going under contract and submitting that offer to see exactly where you're at and what you can put back on your debt, if anything. They might just ask you to stop putting anything on any credit cards until we close because your ratios, you're like this razor thin.
So don't go buy
Um,
the appliances for the house or the furniture for the house or.
no, 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 unless it's cash that you have extra from a down payment that you're not using towards
Wait
down
until
payment
it's
or closing
closed, and
costs.
after the house is closed, you can do those things.
After the house is closed, you can do most of the stuff. You can even, yeah, I mean, there's a lot of different things. Now, you don't want to begin let's say if you're refinancing, you don't want to begin remodeling your home when we
No.
start on a contract. Same with purchasing, you want to make sure the house is done completely because they will require fixes on it when the appraisal comes. um do not make no no late payments. I mean, this is all kind of a lot of common sense stuff, but it definitely needs to be said because we see it all the time. Don't change any bank accounts, don't change your job. Don't There's a lot of, and let us know if there's any major life changes, marital status, um, change in household size, whether it's adding or subtracting. Respond quickly to. I think that's kind of the main things that I see that people do to worsen their credit or make it so that they're not qualified anymore. Um, but yeah, I think that those are the main points.
I mean, that's the worst thing that can happen is somebody gets under contract, they found the house, they're really excited, they go under contract. So now they're going through the motion of getting to that closing point, and then they go out and do something to their credit or whatnot where they no longer qualify, and now they can't buy the house. And it's bad. It's a very sad situation to get in. And sometimes they can even lose their earnest money, which is money they put down up front to show that they're serious buyers. So please, please, please don't, listen to what Robert said there, and don't go buy anything. No high ticket items. And
especially in this market.
I actually had a buyer go to Vietnam, and I had to find the embassy in Vietnam,
Yep,
and
I was just gonna say you had to have gone to the embassy because
the American embassy in Vietnam and send the papers to Vietnam to
yep,
have them sign.
yep, yep. That's what and I'm literally doing that right now in Mexico. So
Yeah.
with Mexico, yeah.
Thank you so much for
Yeah,
sharing
of course.
information. It was wonderful. And I'm going to put a link to your contact information so people can reach out to you. And I can tell you that I have had many, many buyers work with Robert, and they've all been thrilled. And I personally have worked with Robert, and I've been thrilled. So thank you again for your time. And I think it was really great information for buyers. And hopefully
Awesome.
people take this information and go forward to buy homes, and
Yeah,
I'd be happy to help you with that. So
of
okay,
course, of course. Yeah, thank you for having me, Judy. And yeah, we'll continue to work together and talk. And yeah, thank you so much for everything.
thanks so much, Robert.
Yep.
Okay, bye-bye.
Bye bye.